Welcome to another episode of the Einstein Retirement Daily, where we curate financial, economic, and market news for the headlines, information, anything that we think could be helpful to you as a retiree. On today's episode, what we're going to talk about is the Roth conversion deadline that's coming up. It happens every year, and we just want to make sure that all of our listeners have a good understanding of how it works. As always, if you hear something in today's podcast that causes you to want to take some action or make some changes or do something in your specific situation, we do insist that you confer with the appropriate tax, legal, or investment professional prior to making any changes. Okay, Roth conversions. Roth conversions and contributions are different than one another, and they have two different timetables in terms of tax planning. When it comes to individual tax planning, it's a little less involved than, say, corporate taxes or other more complicated tax situations. However, there are a few rules from a timing perspective that are very important to keep in mind for those of you who are doing some individual tax planning. One of those rules that's very important to bear in mind is the one that's keeping me very busy and unfortunately keeping me away from doing this podcast as consistently as I would like. And that is Roth conversions. We do a lot of Roth conversion planning in our office, and it takes up a lot of our time towards the end of the year. Roth conversion planning does require you to complete those conversions before December 31st. Unlike a Roth contribution, which you can make as late as April 15th or even as late as your tax extension. So if you file for an extension and you are out in October and you want to make a contribution for the prior year, you still can. What you cannot do, though, is you cannot make a conversion in a prior year. The conversion has to happen in the year that you want it to show up on your tax return. So if I want to do a Roth conversion in 2021, I don't have till April 15th of 2022. I have till December 31st of 2021. So the current year, December 31st, is the deadline for completing your Roth conversions in order to get them on your 2021 tax return. So do keep that in mind. It's very important, especially very important considering that we do have a deadline for our current tax code, or at least we assume we do. Barring any preemptive changes, we do know going in that the current tax code is set to revert, meaning we go back to the old tax code as of January 1st, 2026. If nothing changes, if everything stays the same, no continuation of the current tax code, we will have reverted on our current tax code, to the tax code that existed prior to the Tax Cuts and Jobs Act. Okay, that happens January 1st, 2026. So if you want to think about it, probably wise to think about it like this. Essentially, you have 5 years, 2021, 22, 23, 24, and 25. So 5 years left to do some advanced Roth conversion planning. Roth conversion planning would be taking dollars out of your IRA, moving them over into a Roth IRA. That is a taxable event. And there again, if you want to try and take advantage of the current tax code to get those Roth conversions completed, you must do this year's by the end of 2021, December 31st. So get your tax plans in place, work with your CPAs, accountants, advisors, whoever's helping you with this. And of course, if you don't have anyone who's capable of helping you with this and giving you really detailed solutions, look, if your Roth conversion strategy is do about 20,000, do about 40,000, about? No. There's no about. In the world of tax planning, there's a very detailed level of care that needs to happen. If the folks you're working with to help you with your Roth conversion strategies are giving you abouts, quite frankly, there's going to be somebody else who can help you without giving the abouts. So really advocate strongly for detailed level of tax planning. Take advantage of the current tax code. 20% of your tax savings is gone after this year. Why? Because one of our 5 years is gone. Okay, so 100% divided by 5 is 20%. So 20% of our tax saving opportunities is gone by the end of this year. So take it seriously, get your tax planning in place, get those Roth conversions done. And again, that deadline, December 31st of this year. Not to be confused there again with contributions, those can be made at any time, but the conversions do have that deadline. Other things that have conversions for tax planning have that December 31st deadline. Realizing capital gains. So if you want to realize some capital gains, shift some assets around, maybe you've held a mutual fund for a long time, you have a lot of capital gains, you want to realize some of those for this year's tax return to maybe shift some dollars in a different direction, then the deadline for that is also December 31st. You can't sell an asset next year and count it on last year's tax return. That is not allowed. Same thing with the Roth conversions. Okay, I hope this has been helpful to you, and we're in a wonderful busy time of year, and we do hope that you're getting your seasonal plans in place, but also get your end of year financial plans in place at the same time. Don't put it off, because no one wants to be doing Roth conversion tax planning on Christmas. I can speak personally about that. All right, with that, I wish you all a wonderful night and look forward to seeing you next time.